Welcome back. Well, let's talk about, as promised, Updater Services. That is the company, that is the stock that we're going to discuss. IIFL Securities has initiated coverage on the name Updater Services. They say it's a buy and they have a price target of 418 rupees. The stock's at just under 350 right now. Now, since listing in October, the stock, of course, is up about 23% or so. And IIFL, of course, believes that in the space that it is in, which is integrated facilities management, there is a lot of room to grow. They actually cite a report by Frost & Sullivan, which puts the company, Updater Services, the number 2 facilities management company in the country. We have Balaji Swaminathan, Chief Financial Officer of the company, joining us to talk about the business. Balaji, great to have you with us here. Good morning. Thanks very much. Prashant this side. So, very briefly, if you can run us through the activities of the company. There is integrated facilities management, and then there is something called business services support, that segment as well, which the second part, which is the business support services, that is a slightly higher margin. The IFM, integrated facilities management, is, low single digits in that sense in terms of margin and profitability point of view. Just the landscape, Balaji, of the business.
Yeah, good morning, Prashant, and good morning and a very happy Christmas and a New Year to all the CNBC viewers. Thanks for having us on this show. Right, look, as you rightly said, broadly we are a business support services platform, right? And with 2 broad segments. One is the IFM, which is integrated facilities management, which basically covers the soft services, hard services, maintaining infrastructure facilities. We maintain certain airports. Statue of Unity is maintained by us end to end, right? So these are the facility related services which are there, and that is almost contributing about 70% of our revenues. And business support services has got various niche sub segments within that. So the larger one is the sales enablement that we have, which is more providing end to end sales related, the BD related services for various clients, where Microsoft is one of our larger clients on that space, right? And
so what do you? So what do you do in that? I mean, the sales enablement. I mean, with a simple example, if you can tell us.
Yeah, so it can range from initial strategization, planning of which market does the brand or the company or the client wants to target on. And from there, we take it up, strategize it. And from there, we get the leads who are the target audience for that, and then get the qualified leads from them, who would spend, who would not spend using AI, and also based on
so this is market research, is it, Balaji, if I understand?
It's not market research. It is more closer to execution of the strategy of the marketing that companies have. Say, for example, Microsoft needs to sell, say, the cloud related services, right? So then they might have a target in a particular segment or a particular country that they need to look at region. Then within that region and the target audience, we would be able to identify and then look at who would be spending, and similarly also look at what kind of spends that they have done in the past. So get that intelligence and then provide that kind of leads to the company so that they can sell and close the deal. So that is a way. So it can range from strategization. I also have field on staff who can go and then work depending upon the industry. Say we work with Shell. So there we work with their distributors. So this is a kind of, I would say, the top of the pyramid in the business support services, where the margins are much higher. And this is more revenue related. So that way it gets that prominence when we interact or partner with our clients.
So in IFM, which is 70% of your revenues, margins are about 5-6%. And on the business end, it is 20% plus margins. But that is only 30% of your revenues right now.
That's right. So the EBITDA margins will be closer to about 13 to 15% on the BSS side, and about 5% EBITDA on the IFM base. And both the segments. So apart from this, we also have employee background verification. Then we do the audit assurance, which is more for the retail segment. Then we have niche logistics. Then we also have ground handling services on the BSS side. And now coming on to IFM and BSS, both the businesses are in the growth markets. So the F&S report is also very clear what is the kind of growth that these 2 segments are growing at. And historically, we have grown above the market growth, and we expect to do that. So we should grow continuously, say for the next couple of years, closer to about 18 to 20% on both the segments equally. So in that sense, the mix should more or less remain stagnant, maybe a few percentages here and there, but otherwise it should remain stagnant unless otherwise any acquisitions are being done in the BSS space, as we mentioned earlier. We will not look at any acquisitions in the IFM space.
Okay, so both IFM and BSS should continue to grow at 18 to 20%. What
right.
would your market share in IFM be? Is there any way to look at it on a consolidated basis?
Look, on IFM, what happens is market share might be a very small number, which should be closer to about 2.3 as per the F&S report. But again, the way to look at that market is the market is more fragmented with a lot of unorganized players. So the comparables, if you look at it, maybe there are about 7-8 players who are there who would control about 15% or about 15 to 20% of the market share. So out of which 2.2% is for UDS. So this is very clearly depicted in the F&S report. You can have a look at there.
Got it. And how quickly is the market share moving to the organized players from the unorganized? You're saying the organized players largely have a market share of 15%. What is the growth rate of the organized market in IFM versus unorganized? Because as the pie increases, even your IFM business should go up, even if you don't gain further market share.
That's right. So look, I think even this is clearly targeted there. So I think from about 50 to 53% of unorganized, which is there, very small unorganized players, this segment should come down to maybe about 30-35% by 2027. So that is the market research report states. F&S, right? So, but also we also need to look at that when the scale needs to come in from unorganized to organized. When you look at it, so unorganized players are controlling very small pieces, and those pieces have to get consolidated so that it can benefit the organized sector, like us, because we are there on the top. So our target is more larger spaces which are there rather than very small offices and other places where the unorganized sector is doing. I think for us the growth, yes, some part will come in from the unorganized to organized. And the larger part of the growth will come in from the India growth story, where we have a lot of infrastructure facilities being set up. And that gives us a stronger hold, because we are there in the manufacturing as a larger chunk. About 30% of our IFM revenues come from manufacturing. And with the Make in India and China Plus One concept, so there are a lot of facilities that are coming up. So that gives us a larger growth space. And similarly, the infra that is being built, be it airports or large complexes that are being done, so that gives us a space to grow.
Mr. Swaminathan, finally coming back to business support solution, BSS, which is where the bulk of the profitability really comes in from. That's 30% of your business right now. What are the plans? Give us a view, say a year, two out. To what extent can you grow it to say 35-40% of the business, and which are the key sectors or industries which could be driving the BSS growth for you?
Sure. So look, these are very niche businesses that we are in, multiple sub segments that we have, but they are leaders in their specific space. Say, for example, in sales enablement, Denave is our subsidiary, and Denave holds the position 1. And similarly, on the employee background verification, maybe we are at 3, and audit and assurance, we are again at 2. So these are very niche positions that we hold in BSS as well. So that way it helps us to project it to our clients. And again, the bigger part is the kind of clientele that we have on both sides, IFM and the BSS. There is a lot of cross sell that is possible, right? So that is more internal synergy that we have, where as of now the contribution from the cross sell is very minuscule, and we expect that to grow. So that is one more from internal, where we try to look at the existing customers and offer a large bouquet of services. And second, coming to the specific industries, right, the specific segments that we operate in, these are niche, and there is a large headroom that we can utilize to move ahead. And pretty much today, if you look at on the sales enablement space, it's more two sectors that where we are very prominent. One is on the IT/ITES, and the second part is on the BFSI. And these two segments, BFSI is a growth story that is going through, so which should help us out. And similarly on the IT/ITES, though there is some stagnation, but again, this being revenue related, people are staying invested into these services, so that as and when the market moves up, they should be able to take advantage of that. And similarly on the background verification space, we are more IT/ITES dependent. And there we had a setback compared to last year, where the growth and the profitability has declined, because the hiring in IT/ITES has slowed down, right? So that way, that is already captured in the current year numbers that we have. So from here, we expect this to move further upwards rather than going down, because we think that we have already hit the bottom at that place in terms of hiring, right?
Yeah.
So
yeah.
that way that should help us out.
Well,
And
yeah.
of course, the global flight handling is the other piece, where we have about 20 airports that we have concessions for the next 10 years, and only partially we are operational there. So that should
Yeah.
also give us a growth story from there, from the base where we are standing today. So in that sense, it's a combination of both internal synergies that we have, and similarly the industries that we are working in, and the services itself will provide us the path, the runway for.
Got it. Balaji, we'll leave it there. Interesting conversation. Had a few more, but we'll have you back to talk more about this. But I think this is a good place to start. Thank you very much for joining us and running us through what the business is about and some of the key drivers for the business as you see it from here out. So that's Updater Services, facilities management company. There are others listed out there. I mean, which include companies like SIS, maybe to a lesser degree, Teamlease perhaps. I mean, some of the businesses overlap with what Updater does, and a few others as well. So that is the company in focus. The market